This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com. As part of our ongoing series on financial repression, I have Dr. Paul Roberts joining us this morning. Dr. Roberts has had a career in scholarship and academia, journalism, public service, and business. He is chairman of the Institute for Political Economy and was Assistant Secretary of the Treasury for Economic Policy during the Reagan administration. Welcome, Dr. Roberts.
Hey, pleased to be with you, Gordon.
I'm honored to have you on. I've been following your work personally for years, and I very much appreciate how frank and honest you've been, and well researched your work has been. So I need to start off by thanking you very much. Could you give for our first-time listeners just a bit of a thumbnail of your background? I briefly tried to describe it.
Well, I served in the congressional staff. I was an economics professor at a variety of universities, including Stanford, Georgetown. I was Assistant Secretary of the Treasury for Ronald Reagan, in charge of domestic economic policy. I was Associate Editor and columnist for the Wall Street Journal, columnist for Business Week, for Scripps Iowa News Service, and other such things. So pleased to talk with you this morning.
Dr. Roberts, we're here to talk about financial repression. And let's kick it off. Could you tell us what those words mean to you? And is this a policy, or what is this?
Well, it's going on, Gordon, on several fronts. And it's conducted by different people for their own agendas, though they all seem to be mutually supporting. You have the financialization of the economy by the big banks. And what that means is they are converting the entirety of the economic surplus to paying interest on debt. So they are draining the economy of all vitality. There'll be nothing left for the expansion of consumer demand, for business investment, for old age pensions. When they financialize the economy, at whatever level of living standard you may have, high, low, medium, or whatever, it appropriates the economic surplus, that is, anything that's created beyond the maintenance of the current living standard, into interest on debt. So that's one way of repression, and this is something that the big banks have been doing for some time, and it's very dangerous for a number of reasons, which are obvious. Another form of financial repression is the offshoring of the middle-class jobs. What the corporations and Wall Street have achieved by offshoring the manufacturing jobs, the tradable professional skills jobs such as software engineering and information technology. What they've done by moving these offshore is to recreate the labor market conditions of the 19th century and the wage exploitation of the 19th century. For example, take Apple, the computer company, or Nike. They don't own any factories. Their products are produced for them by Chinese firms in China with people working at wages comparable to the wage exploitation in the United States in the 19th century. And so by moving these jobs offshore, they essentially abolish their labor cost and convert what had been wages and salaries to American workers into profits for the shareholders and into bonuses, performance bonuses for the executives of the company. So you have, again, the American products made with labor in work conditions and in wage conditions similar to the 19th century, before there was any reforms or any unionization. So this is oppressive not only for Americans who lose their jobs, lose their careers, lose the ladders of upward mobility. You know, we have this shrinking middle class, and therefore we have this worsening distribution of income and wealth, which creates social instabilities as well as economic instabilities. But also, we have the exportation of labor in Asia, because the workers are producing far more value for Apple than is reflected in their wages. So that's another form of financial repression. And a third form that I can mention is the manipulation of the bullion markets. There's no free market in the futures markets of gold and silver. These markets are manipulated.
Would you restrict it to just the bullion that is in fact manipulated? Or is
No.
it broader based than that?
You know, I'm sure it's everywhere, but I'm using the bullion markets for a specific reason, because when they manipulate those, they destroy the capability of people to protect their wealth from the massive money creation and massive debt creation. In other words, you say, okay, look at all the fiat money that's created in the United States. It's now being created by the European Central Bank, by the Japanese Central Bank. The three large currencies are growing far beyond the ability of the economies to produce goods and services to absorb that money. And so how can I protect my wealth? Why should I buy bonds when the interest rate is negative? Why should I buy stocks at these extremely high prices when there's no growth in consumer income, no growth in real retail sales, no growth in employment, understated inflation? What do I want to be in this bubble for? It can't go on forever. I can ride it, but how do I know when to get out? You know, it's a timing issue. So I want to protect my wealth. I think I'll go into gold and silver. Well, you get stymied there because the bullion banks, agents of the Federal Reserve, go into the COMEX. Anytime the gold price starts rising in the future market, they go in, usually at very inopportune times for trades, in the middle of the night or sometime when trading is light, and they dump huge amounts of naked shorts onto the market. It absolutely drives the price down. It sets off stop-loss orders, margin calls. And so they're able to control the price of bullion because the price of bullion is set in the futures market, not in the physical market where people buy the gold and take possession. So we have in these markets a very curious situation where we know demand for physical possession of gold and silver is rising strongly. We know that that there are constraints on supply. You may remember last year the U.S. government suspended the sale of silver eagles because they couldn't get any silver. You may remember that Canada had to ration silver maple leafs because they couldn't meet the demand, and yet the price of silver was falling. So you have this unusual, this economically impossible situation, high demand, constraints on supply, and falling price. The only way that can be achieved is by manipulation. And the way the futures market is set up, and with it being the determinant of price, they are able to manipulate that market. And so, and in the process, they're able to protect the dollar from the massive quantitative easing that went on, because as gold began reflecting the lack of confidence in the dollar, the Fed began acting. This was, in the fall of 2011, and they've been doing it ever since. The bullion banks go in, dump these contracts, suppress the gold, scare everybody to death, and reduce the price in a way that discourages people from trying to protect their wealth in that way. So those are three methods of financial repression. All of them are acting now. Some of them are for corporate interests, some are for the financial interest, and some are for the government's interest.
How much of this stems from government policy in a structured manner? In other words, is there real planning of policy behind these situations, or is it happenstance, or is it the hidden hand of capitalism, people trying to make money, and this is the way to do it?
I think there is a lot of collusion. For example, the government colluded with the banking system in financial deregulation. They appealed Glass-Steagall. They expressed this absurd claim that financial markets are self-regulating. You may remember Alan Greenspan taking that position before the Congress. You may remember how Greenspan, the Treasury Secretary, the chairman of the SEC, prevented Brooksley Born from doing her job in regulating over-the-counter derivatives. So there was collusion between the government and the financial sector to turn the financial system into a gambling casino where the bets are covered by the taxpayer and the central bank. So when the financial guys playing in this gambling casino lose, then they just turn to the taxpayers for bailout. So they turn to the Federal Reserve for money printing. Print the money, buy our bad financial instruments from us.
So they get the upside, we get the downside. That's a good investment.
That for them. So
yeah, not for us.
Not for us.
But a lot of this is not really just unique to the United States. We're seeing this in most of the indebted developed world. Are we not?
Well, I think it spreads from here. So I think
So this is the cancer. The cancer started in America.
It started here, and because of the interrelatedness of the European, American, and Japanese banking systems, in fact, all the banking systems, it spreads everywhere.
And the carrier would be probably the international banks. Am I jumping to a conclusion there?
No, I think the presence of Goldman Sachs, for example, in Europe is immense. Just remember what happened with the Greek government. What happened to the Greek government, the Italian government, when the sovereign debt issue came up? Well, they both found that they no longer could even elect their own prime ministers. The prime ministers were appointed outside the system, imposed on the countries, and they were former Goldman Sachs executives.
Both of them, yeah. Greek and Italy. And I remember when it happened, and it was like, it had happened within 10 days. It was no votes, no nothing, appointments, and that was it.
Yes, and so to get back to your question, some of it is collusion between government serving the financial interests, because the Wall Street is a huge supplier of political campaign funds. And so if you are going to be reelected to the Senate, the House, you're campaigning for the president, you're dependent on these funds. And so you answer to the donors. You don't answer to the public interest. It doesn't give you any money. You don't answer to the people who vote. They don't give you any money. You answer to the donors, to the campaign, which is Wall Street, the military security complex, agribusiness like Monsanto, and the extractive industries, oil, timber, mining. These are the powerful interest groups that use the government to serve their interests. And so that's the kind of collusion there is. Now with the offshoring, This, I think, originated in Wall Street. Wall Street, once all these takeovers became possible, Wall Street went into the financing of takeovers. And then they would use this threat against the corporations to move their production offshore in order to increase profits. To say, we want higher profits. You're not making enough profits. Move offshore, or we're going to finance somebody to take you over. So this then forced the exodus of manufacturing jobs. And that then served the interest of destroying the unions. It also served the private interests, because once the industrial and manufacturing unions were reduced to nothing, the Democrats now have to go to the same people as the Republicans to get campaign financing, to get election financing. So that you now have both parties reporting to the same interest groups, because the destruction of the manufacturing jobs in the United States destroyed the Democrats' independent source of campaign funds, which were the unions. So you now have one party with two heads, and they report to the same masters. So there's no longer any countervailing power. You don't have the Democratic Party any longer representing the workers against the Republicans representing business. Both parties representing business. So this is another form of the collusion, and you can see why politically you can't do anything about this financial repression. And of course,
that's your conclusion, that really there is there is nothing that can be done? This is a train that's going no matter what? That's
right. Well, what will derail the train will just be crisis.
So where does this lead? Does it just lead to a crisis, and that's eventually what we should expect? Is another 2007, 2008 financial crisis, but maybe at a even larger level? Is that in the cards?
I would think it would be, with all the derivatives. Just think about all the debt that was incurred for fracking. And now the oil price has collapsed. So how is this debt to be serviced? What kind of derivatives have they spun off of that debt? The original banking problems from 2007, 2008, these have never been addressed. They've been staved off by the expansion of the Federal Reserve's balance sheet from, 8 or 900 billion to 4.5 trillion. The Fed printed money year after year after year, sometimes $1 trillion a year in money creation, buying the bonds, buying the debt-related derivatives from the banks, buying the Treasury's bonds to finance the annual deficit. This is an enormous increase in debt relative to the GDP. There's no recovery. They tell you there's a recovery. It's just all a complete fraud. There's been no growth in real consumer income. So how has there been a recovery? In fact, there's been no growth in real consumer income in a couple of decades. And when Alan Greenspan was Fed chairman and he faced this, he substituted a large expansion in consumer debt for the missing growth in consumer income. That was the housing bubble. So he substituted the indebtedness of the population to keep the economy going for the lack of any growth in their real incomes. Well, now the people are in debt up to the gazoo. They can't take on any more debt.
Yeah, and the problem with the debt, as far as I can see, is it's non-productive debt. So it's debt that's allowed us to go to a 70% consumption economy, but none of the debt was actually productive in that it's generating real discounted free cash flows that allow you to service the debt. So it just feeds on itself, and then when a moment demand falls off, because as you say, real disposable income has been steadily falling for years, you now have a demand shortage. And we have excess supply because we've built out around the world so dramatically on this higher expectations or higher levels of demand and cheap money. Something gives in there. Have I got that right?
Yeah, it's not sustainable.
Yes.
So
There's a
that
mismatch.
that can be part of the crisis. Um, but we have also eroded the middle class.
I would use the words, frankly, I think we've gutted the middle class. The middle class, at least in
That's right.
America,
And that
is getting to be a scarce entity.
that's right.
Because when you add in the healthcare costs and tuition fees for student loans and things that people really spend their money on, they're not getting by other than increasing the level of debt. It's like we have a subprime economy operating. It may be overstating it, but that's the sense.
That's right. And also, of course, the retail stores that serve the middle class, they're closing. Like Sears, Macy's, Radio Shack.
Well, we've had this massive expansion of retail's floor space that just is unjustified. And then with the internet coming and robotics and the tools to make it more efficient, that is even ordering online, it's changing the whole retail complex, which has been a big hirer of low-cost labor for quite a few years, and that's now about to change. So I know up here in the Northeast, I've watched technology, which was employing hundreds of thousands of people in the days of DEC, Wang, Prime, Data General, gone. Biotech doesn't create it. Most of those people originally were employed in real estate, which disappeared, and now are low-paying retail jobs that now, in turn, are exposed. This is not a very pretty picture.
That's right. It's not a pretty picture. So, but in addition, we have crises coming elsewhere in the world. We have the neoconservative control of American foreign policy, and they demand American hegemony over the world. So we've been in 14 years of wars in the Middle East that, according to Joseph Stiglitz and Linda Bilmes, have added a minimum of $6 trillion to the national debt without 5 cents worth of investment for the country having taken place. We've now got the neoconservatives driving the conflict with Russia, which is insane, with China, which is insane. The United States hasn't got the power to try to dominate Russia and China, especially now that the two countries have a strategic alliance. Moreover, they have the BRICS, India, Brazil, South Africa. You have much of the world turning away from the United States because of Washington's abuse of the dollar as world reserve currency, Washington's abuse of the dollar-based payment system to impose unilateral sanctions, which essentially are acts of war. Threatening people with expulsion from the clearance mechanism. So people are saying, we don't want to be part of this, we're going to have our own system. The BRICS have established their own version of the IMF. You see the impact of the spy scandals. People are saying, well, we're going to develop our own internet services, our own kinds of electronic communications, and exit the American ones because they're used for spying. So all of this is also going to not only affect the these businesses, telecommunications and otherwise in the United States, it's going to affect American power. It's just going to start shriveling. It's already it's peaked, it's in decline. And so if you have these crazed neoconservatives demanding control of the world and they're faced with decline in power, you don't know what they're going to do. It's a very, very dangerous situation. And I'm surprised that it's taken the world so long to realize the threat that the United States poses to the rest of the world, and to realize the abuse that all these countries have suffered as a result of the dollar-based payment system. It's essentially a system for looting, globalization, neoliberal economics. These are tools of American imperialism, economic imperialism. And these countries are beginning to realize that. And the looting of other countries by American imperialism, it's now reached the point where it's turning on itself. If you look at Greece, for example, the situation in Greece, this is a situation where a member of the EU, one of the Western countries, is itself being looted by the IMF. So when you start eating your own, and of course Italy will be next, Spain, will these countries tolerate that? Will they permit it? The Greeks are showing defiance. What if the Greeks pull out? So will the Italians, so will the Spanish. The EU starts to break up, the euro breaks up. The American empire in Europe breaks up. So these kinds of crises are much greater than anything we have ever experienced. And internally, with the decline of the middle class, with the worsening distribution of income and wealth, the concentration in a few hands, essentially in the hands of multi-billionaires, you get social instability in the United States. You get social, political, economic instability. And the consequences of that are going to be very heavy. And as far as I know, there's absolutely no way of derailing any of this, of correcting it. It's just going to play out.
Final question for you. What does an investor do besides gold, precious metals?
He can gamble in the gambling casino.
And that's what it is, isn't it?
The difference is his bets aren't covered by the taxpayers and the central bank. But that's what the stock market is. I mean, how can you have a stock market at 18,000 when there's been no growth in consumer income for decades, no growth in real retail sales, when you have the collapse in the labor force participation rate? You know, they tell you, oh, the unemployment rate's 5.6%. It's 23%. When they say it's 5.6, that doesn't include any discouraged worker. If you're not looking for a job, you're not considered to be unemployed. If you've looked for a job for 3 or 4 years and can't find one and just give up, you're not counted. You're no longer in the labor force, and so you're not part of the unemployed. So they rig the way they measure things. They rig the way they measure inflation. They tell you there's no inflation. Ask anybody who does grocery shopping, pays utility bills. So, and they create this impression, oh, look, we have an economy, it's growing and growing. There's been no increase in real output since 2007, maybe even 2006. They get the increase in real output by understating inflation. So when they have to adjust GDP for its real value, since they don't measure any inflation, they end up counting the inflation or the price increases as real GDP. So it's all a hoax. It's just all a complete hoax. And it's amazing to me how they're able to keep all these balls in the air, all the rigging that is necessary. First of all, they create this picture of a good economy. There's no such economy. If the stock market starts to adjust, the plunge protection team goes in and buys Standard & Poor futures contracts, pushes it back up. If the gold price starts moving too high, they slam it down with naked short selling. If you buy a bond, you actually have to pay a premium to buy the bond because the interest rate's negative. How can they keep this going? How can you have a growing economy and all these predictions of economic growth and have negative real interest rates?
I guess we can never underestimate the deviousness and cunning of certain segments of our society, and they've been able to kick the can down the road and to extend and pretend for longer than a lot of us could imagine, but it could go on for a fair bit of time, and everybody could lose a lot of money. Closing comments that you'd like to leave with our listeners? Key messages?
I think that we've covered the waterfront, I think. My website is just my name, paulcraigroberts.org, and I address address many of these issues constantly.
And I encourage our listeners to go to your site. You do some absolutely fine work, and clearly we just skimmed over the surface of many of the things that you've written about. We have to have you back later on in the year. Thank you for your time, and all the best.
Thank you. Pleasure to speak with you.
Talk to you again. Bye.
Goodbye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.